All right, we are live. Welcome back to Stock Tricks with Nick for this week's episode of Midweek Movers. Typically, we have this live stream on Tuesday night, kind of breaking up the week, but because of Labor Day on Monday, market was closed, so this is middle part of the week. In today's video, I'll be giving a market overview. We'll go over the S&P 500, NASDAQ, some small growth ETFs such as IWO and ARK. To take a look at an overall market review, we'll check out my current portfolio and then go over the breakout watch list. I have 21 names for you today. And then I only got 3 stocks on Twitter and StockTwits that you guys wanted to see. So if you're jumping in the live stream and you want some charts, some stocks to be broken down for, drop those in the comments section below. All right, quick disclaimer. Anything that we talk about today is not financial advice, not stock advice. This is for educational purposes only. Trading comes with financial risk. Please do your own due diligence. Before I do that, let's jump to the S&P 500. Let's go this chart. It's a little bit cleaner to see. So S&P 500, glad to hear that you guys can hear. We had some audio problems the first time we did this, but all right, so S&P 500, I mean, zooming out here, since the lows last March, this has been in just a pretty strong, quiet uptrend. We had a little bit of an issue between September of last year up until November, and then we had those 2 months from kind of mid-November to start of February that was just incredibly strong for growth stocks. So are we in this section where we're going to start to get chopped up a little bit and then go on that nice tear? Who knows? Historically, the S&P 500, the only month it has negative expectancy is in September. So take that with what you will. Always manage your risk. I don't usually put too much weighting on that. But I mean, if that's something you use, then good for you. Right now, the stock did close right at that 8-day exponential moving average. That's the purple line I have here. Then I have the 20-day moving average in green and 50-day in red. You can see just a couple times we bounced right around the 50-day. So if we continue to pull down, we got the 20-day first and then the 50-day at 440 or so. And we're not seeing a ton of selling volume just yet, like we did in these stronger pullbacks. A lot of growth stocks were extended, did pull back a little bit. But for the most part, I mean, the strong stocks are holding up. We'll go over the stocks showing relative strength in a second here, but that's the S&P 500. Yes, we will get to Tesla. That was one that was requested on Twitter. QQQ, we had this nice 2-week run where all the breakouts were working. The index extended 6% from what looks like when it was rolling over to the downside. Found buyers right above the 50-day moving average, moved up that 6%, and then has traded sideways. Today we had a quick bounce under the 8-day exponential moving average, still closed above it. Not doing anything too wrong there. Now I want to get to IWO. This is the main index or ETF that I use to kind of gauge whether the swing trading or breakout trading system is in favor, working. So kind of going back in time, here's kind of end of October, we pulled back, and then from there we had a nice 50% move in this index all the way up until February. That was the really clean time to make as much money as you can. And then you could see how choppy this got. We had a 16% pullback. I mean, I'm not going to measure each of these pullbacks, but I mean, since February, it's been extremely choppy for growth stocks, for breakouts, not much working. It looked like we were rolling over here under the 200-day simple moving average. We kind of double bottomed. So at that point, when we came off that double bottom with so much volume, I did start to see some success on my swing trades, got a little bit aggressive, maybe too aggressive because I got caught and got stopped out of a couple larger positions today. Overall, my account was down 1%, which is large for the way I trade. So this day, let's see, down 1.3%. We're pulling back. We're right at the 50, 200, and 20-day, all around the same price. Lower volume on that pullback. So far, not doing anything like disastrously wrong. Just the stocks were extended. we need a pullback. We're starting up the right side of the space on IWO. And finally, I know a lot of people look at ARK, or at least they did up until February. Similar story, had a lot of chop through here, but this area was getting very, very tight. It broke to the downside, and like a lot of stocks that undercut and rip of a tight area, that was working for a lot of breakout trades as long as you got that second pullback undercutting the lows in the first. From there, let's see, this moved up 9%, got extended, and then today down 3% on an uptick in volume back to the 20-day moving average. Not the greatest sign there. So definitely some reasons to be cautious. I wasn't as successful trading today, got stopped out of a couple positions. The indexes are showing a little bit of selling pressure after we got extended there. So is this a start of something stronger? I don't know. You never know until it's after the fact. So that's why we always have to manage risk accordingly. All right, that's the market recap. Current portfolio, I'm not going to go over each of these stocks, but this is the order by weight. I'm about 55% invested at this point. I was about 80% invested going into today. Took some trades off. What was the big one I took off? DOCS. Got stopped out of the last little bit there. And then, should have wrote this down. BEAM, that was a big one I got stopped out of. Palantir got stopped out. So throwing back a couple of stocks that really didn't move away from my buy point. Usually the strongest stocks break out and immediately start going. So if I have to give a couple back to manage my risk accordingly, I'll do that. That's the current portfolio. Here's the breakout watch list. So these are the 20 stocks that we'll be going over. We'll use MarketSmith to break down their fundamentals, and then the E-Trade chart to find our entry point on that. And then after that, we got 3 stocks, ALGN, ESEA, and TSLA, Tesla, that you guys requested. So we'll go over those 23 stocks. If you guys have any more stocks that you guys want to see, drop those in the comment section. I have that up right here. I can see, and we'll get going. All right, let's go first to AMBA. Just had earnings a couple days ago. Earnings per share was up 483% year over year. Sales up 58%. After-tax margin up 16%. We do have 2 quarters of 400% plus earnings per share growth. Sales has been accelerating. Went from negative 17, 9, 28 to 58. You see that very strong pop on huge volume right up to the previous high, basically, and then found some resistance there. Group strength rating, A+. It's in the semiconductors, so that's 4 out of 197. Obviously a very strong group there. Within that group, it's the 7th strongest stock out of 29, so we're always looking for the strong stocks that are getting stronger. Accumulation distribution, B, kind of average right there. Composite rating, so overall 97 from MarketSmith, very strong stock. Let's see, ownership, so checking the funds, we want fund ownership to be increasing quarter over quarter, so we went from 347 last June to 458 this June, and we've had a nice steady increase there. So all good things on a fundamental standpoint. Let's check the chart so we can find our entry point. All right, so here you can see clearly tons of volume coming out on this move. Let's measure low to high here. 56%. We have that kind of wonky upper wick right here. We'll just measure from there. So there you find some resistance. Lower highs, lower lows today, but we undercut the low and then we rallied up. On a rough day, still up 0.9%. So that's showing me good relative strength. On less volume, that's fine. It's middle of the day or middle of the week on a shortened week. But with this, I'd just be looking for a break into all-time, or not all-time highs, but highs from here, 139.85 is a possible buy point. Let's jump into this chart. Let's see. I'm just trying to see if there's a better or lower entry point in a tight range, and there really isn't on this one. So yeah, I'm going to be sticking with that 139. What is it? Let's see, 139.85 as a possible buy point on this one. Got alert set. AMBA. Let's go back to MarketSmith. BLD. This was on the breakout watch list. I think not this past week, but the previous week. Obviously, cup and handle here, anyone can see that, but MarketSmith does the good job of kind of auto pointing that out to you. Earnings per share rating, 98, group strength B+, 58 out of 197. Within that group, it's the 5th strongest out of 42 stocks, so about top 15% there. Accumulation distribution, C+, not great. That's one yellow flag for it. Composite rating overall, 98, very strong. Relative strength though, 80. I would like to see that in the 90s if possible. But this is such a tight range that I wanted to bring it to everyone's attention today. Earnings per share, that's been accelerating, 37%, 45, 47, 64. Sales, 2, 9, 14, 29. After-tax margin, right around 10%. So we almost have that code 33 that Mark Minervini talks about, where you have the acceleration of earnings per share, accelerations of sales, and accelerations of after-tax profit margins. Checking the fund ownership, we did take a little bit of a dip from 671 to 650 this last quarter, so yellow flag there as well, along with that accumulation distribution. That, I mean, those two probably go together with funds taking or selling their positions and bringing that down a little bit of distribution there, C+. So I'm on BLD. You can see the nice cup and handle. I mean, this range, I want to measure this really quick. So that's 3%. The stock's been trading within 3% for how many trading days? 12 trading days, almost 3 weeks. That's incredible for me because you could keep a very tight stop loss, get a larger position size on it, and then if you're wrong small, and it'll probably tell you if you're wrong pretty quickly because we want to be buying. Okay, I shouldn't say we want to be buying. I will be looking to buy maybe 221, a high from September 2nd, or the high in this range, let's see, 222.97, excuse me. So the high from August 30th. Then you got your low, or your stop below the lows, 3.3%, not bad. BLD. If you guys have questions along the way, drop them in the chat as well. And if it's about the current stock, then I'll kind of pause, go to the question, make sure that I'm getting that answered. My camera, let me do that. There we go. All right, BLD, we have BYRN next. This is one that did not make the final cut of the breakout watch list, but was on like the last 30 or so when I narrowed it down to 16. Earnings per share, I mean, it's really young, so 54, not putting too much credibility on that. Group strength B, 65 out of 197. Within that group of 43, it's the 12th rated stock, so top quarter-ish. Relative strength, 85. Composite rating, 78. A little bit on the low end. That's why it didn't make the final cut. But sales the last 4 quarters have been over 1,000% increase. So that caught my attention. This last quarter had earnings per share increase of 350, but it did go from negative 0.02 to 5 cents. So the negatives, you got to kind of, I don't know, take that with a grain of salt with that flip there. What else? Fund ownership. We have 1 quarter of data, 60 funds in June. BYRN. It's also a more thinly traded name, so 280,000 shares traded a day, so size accordingly. We had this nice move up, 28%, and then on larger volume, and then volume lightened up a little bit through here, and then we got kind of big volume on Tuesday, shortened trading week, and then today. But it's respecting this 8-day exponential moving average very well. I would be looking for a break over Monday's high, 30, a nice round number on a thinly traded name. I like to try to keep those lined up when I can. I do not trade options, so I only trade common stocks. BYRN here, let me jump back. Next we have Datadog. This is one that I tried to take a trade earlier, got stopped out, basically for even because I took some profit on the way up. And then I was waiting for a pullback or shakeout for a while, but we'll get to that in a second. Just had earnings a couple weeks ago. Earnings per share was up 80% year over year, sales up 67%, after-tax margin up 14%. Earnings per share rating 44, so a little bit weaker there. Group strength A, 18 out of 197. Within that group of 106 stocks, it's the 15th strongest stock, so top 15-ish percent. Accumulation distribution, B+, composite rating 93, relative strength rating 94. So when you have two 90s there, that's something that I definitely like to see. Fund ownership has been increasing, went from 575 to 998, almost doubled within the year. So I did take this trade today, but it didn't really go anywhere, so I don't feel bad about talking about it. It's not too far extended. What I was waiting for on this one, it looked like it was wedging up here. So when you have a stock wedging up like this, the sellers have no reason to get out because it's just, I mean, it's just gradually going higher. I got stopped out on this day when it reversed. I sold some into strength here, got stopped out as it came to my break-even point after, I think I got in on this candle right at the close because it was strong. So, I mean, I got out very quickly. I tried to manage my risk pretty quickly. But, so with this, we had that, finally we had a shakeout out of this pennant, or out of this wedge. We went under the 20-day moving average. We moved back up, closed pretty high in the range, and we did so on higher volume. So this candle checked all the boxes that I was looking for on the stock. I would be looking, I got in with a break over, where is it? 139.68, so I'm down a couple cents on the position right now. That could be an entry point as well. If we open lower, then just take out the closing range, 139.57. Otherwise, just a break into new highs, 141.14 is a possible buy point for Datadog. All right, D-low. This has been a really wonky one to trade. I've had this on the breakout watch list a couple times. Earnings per share has been incredible growth, 50%, 300%, 500%, and then 100%. Sales, 96, 94, 124, 186. This last earnings report was insane. After-tax profit margin up 30%. And you saw after that earnings, it did pop up, showing relative strength rating 97, group strength B+, 51 out of 197. Within that group, it's the strongest stock out of 38. Accumulation distributions B+, composite rating 97. So we have 97 composite rating, 97 relative strength rating. When we can combine those 90s, that usually helps our trades out. Only 1/4 of fund information at 168. Let's find an entry point on this. All right, so today, we had a double inside day, Thursday, Friday. We flushed lower on Tuesday, lower highs, lower lows today on Wednesday, but we did bounce right at that 20-day moving average. We moved up and we closed positive on the day, plus 0.9%. On a tough day, that's really good to see. Another thing that I like is after the post-earnings move, we pulled back here, right? And we finally undercut that low, shaking out any traders, typically, who got in on this pullback. We bounced right on that moving average, and buyers stepped in after that move. So one thing you could do on trades like this, really strong names that you need to get creative on getting an entry point, is when it undercuts the low in a pullback like this, and then recaptures that price. So the low here, 61.33, that could have been an entry point. I didn't take that as an entry point. But, I mean, shoulda, woulda, coulda, right? I'm looking for a break over today's high, 65.22, as a possible buy point there for DLO. Oh, one thing that I wanted to say, I forgot to say this at the beginning. You guys are amazing with the amount of support that you guys give me. I was going over YouTube analytics, and literally 10% of the people that watch the video like the video, which, if you compare that to like almost anyone else, is extraordinary ratio. So thank you for your support. If you haven't already, hit the like button if you enjoy it. Subscribe to the channel. I do this live stream midweek and then do the breakout watch list on Sunday morning for the kind of a watch list for the rest of the week. So thank you for all your support. Enough blabbing. Let's get back to stocks. DVAX. All right, so this one, biotech, relative group strength B+, 59 out of 197. It's the fourth strongest stock out of 744 in that composite rating. Relative strength, 99. Composite rating, 94. We got those two 90s that we're looking for. Accumulation distribution, A+. That's incredible. And then earnings per share, last 2 quarters, 107, 115. Sales, last 4 quarters, we have acceleration, 27, 85, 663, and then over 1,000% sales increase. Profit margins have turned it around the last 2 quarters, up 1% and 18% on that. Fund ownership, very steady the last year, 223 to 232. Ideally, that would be increasing, but so unfortunately, it does not check all of the boxes, but a good amount of them. Dvax. So great relative strength, 3.57% up today on an increase in volume. Let's just measure this. I think this is the high type flag, up 121%, pulled back 17%. Yes, that does qualify. Remember, high type flags are 90% or more in 8 weeks or less, and then a pullback within 25% of the highs, typically within, I think, what is it? 4 weeks, 6 weeks? One of those, but obviously very strong, holding that 8-day exponential moving average well. Yesterday was an inside day on also a tough day in the market, stayed above that 8-day exponential moving average. Then we took out today's high, which was 1833. That could have been buyable. We closed today at 1826. So looking at this, just a break over today's high, 1845, that is buyable. With the market being as choppy as it is, I might wait for a second pullback on this. I'm not exactly sure how I'm going to play this, but we do have a couple days right at the same place. Let's see, 1845, yeah, on the cent. So, yeah, either 1845 or I'll wait for a second pullback, allow that 20-day. Ideally on these high type flags, when that 20-day meets the 8-day exponential and it makes that turn up, that's when you strike. But on really strong names, they don't need to wait for the 20-day moving average. So this one might not. Dvax. Extended. Sorry, Brent, I didn't see your question before. When I say a stock is extended, it doesn't typically have to do with the Bollinger Bands. If we see a red candle close on the outside of an upper Bollinger Band, typically that is kind of like a, hey, the stock's short-term extended. Obviously, like here's an example. It went another 13% before that red candle closed outside of the upper Bollinger Band, and then we had that pullback. But that's one thing that I look for. But if a stock's super volatile, then these bands are already like very extended. So when I say extended, I just mean extended from the ideal buy point. So I'm not buying a stock that's already 4%, 5% from my, like where I would draw the pivot point where I would try to buy it kind of perfectly, if that makes sense. Whoops. All right, let's go Etsy, ETSY. This is one that was super loopy here, had that nice tight range. I think we talked about this on a live stream, and then broke out on heavy volume there. Consolidation, we'll get to the chart in a second here. I keep doing that. Earnings per share rating, 84. Group strength B, 73 out of 197, right middle of the road there, but it's the second strongest composite stock out of 54, so top 5% there. Accumulation distribution, B minus, but I think it's starting to improve because we did have that really high volume up day. Composite rating 90, relative strength rating 89. Doesn't quite hit that double 90s that we're looking for. Fund ownership exploding, 780 to 1716. But it is starting to, it's still increasing, but it's increasing at a decelerating rate. As you can see, went from 1672 to 1716, where typically we had 200 or so new funds each time. All right, so Etsy, where do we find our entry point? Yeah, okay. So zooming out here, this was, I mean, why I don't buy stocks under the 50-day moving average is just wasted time. Because there's always going to be stocks above those 50, above the 50, above the 200-day. This is just kind of chop city. Here was like the tightened range we got, and then it eventually got out on volume here. Traded sideways, inside day today, down only 1%, still above that 8-day exponential moving average. Did so on lighter volume. I want to see an undercut of these lows. I know we got that yesterday, but that was just kind of lower lows, and we haven't gotten that. With this name, because it's so choppy here, there's a little bit of supply zone. I should put, where is it? Sorry, I'm going to put volume profile on here for a second. I took it off for a different video, but yeah, so we're pulling back to this volume shelf here. So above that, man, and maybe you can get it. I was thinking wait till the high from Friday, 221.36, but with this volume shelf as support on here, we want to get as low as possible so we can keep our risk as tight as possible. So maybe just a break over today's high, 217.98, keep your stop under the low in this range, which would only be 3% risk. So that's Etsy. That's how I would play it. I'm going to be looking for volume triggers as well, high average volume on the day if I'm going to be taking a trade. Next we have JLL, thinner traded name, average daily volume 366,000 shares. Earnings per share rating 93, accumulation distribution A-, group strength A-, 37 out of 197, fourth strongest stock out of 54, so top 9% there. Composite rating 96, relative strength rating 94. We got our 290s. That's good to see. Let's see, earnings per share. The last 2 quarters have been strong. The 2 quarters previous to that were negative, so not as good. But the last 2 quarters up 329%, up 492%. Sales this quarter positive, up 22%. We had negative before, but at a decelerating rate, which is yellow flag, not great, but not terrible. After-tax margin increasing just by 5%. Nothing crazy there. Fund ownership is decreasing. That's another yellow flag. So is it the ideal setup? No. Can we make money from it? Maybe. Do we have to manage risk? Always. All right, JLL, very tight action through here. We're on the underside of the 20-day moving average. Let me zoom out. I think this was a 53% move up. No, what was I thinking of? This is 38% move up. Good volume on that move though. Look at all the volume as it's soaking up here. Pull back to the 20-day, bounce. This is tightening up through here. Let's measure high to low. So if we buy with a break over the high from September 1st, that's 247.71. Put our stop under the low from that day, 3.4% risk there. A break over that area is also getting over the kind of main part of the volume shelf here, so less resistance up top. And you can see this is, I mean, many stock charts look like this since March, but up 160%. JLL. All right, we got KLAC. Earnings per share rating 95, group strength B+, 53 out of 197, second strongest stock out of 32. You have that obvious cup and handle tightening up here. Accumulation distribution C, yellow flag on that. Composite rating 98, relative strength rating 87, fails the double 90 test. Earnings per share accelerating 22%, 22, 56, 62. Sales accelerating 9, 9, 27, 32. After-tax profit margin basically accelerating 31, 30, 33, 35. Basically, it's increasing, but at that kind of steady rate there. Fund ownership also increasing 1918 to 2237. KLAC, let's find our entry point. Yeah, so big cup, pulled back to the 50, undercut that, bounced. Now we're bouncing at the 20-day, tightening up, undercut the 8-day exponential, did so on very light volume. So this is one where I'm going to be patient on this because we're kind of extended from the main part of the volume shelf. I mean, only 4%, but I don't want to take 4% losses on imperfect setups, if you will. With this, I'm waiting for a break over Tuesday's high, 343.08. Even that would be pretty aggressive. 346.90, break over August 30th high. Just so the higher you can get on the right side of the base, the higher probability that it is going to continue climbing. The lower you get on the right side of the base, the lower probability it is to climb. But also, then you can keep your stop very tight. And if the stock is going through that just right of the base climb, you got in at a lower price. So you got to wait risk reward, which, I mean, that's trading for you. All right, so that's KLAC. Next we have Lqdt. This was on the breakout watch list, so if you haven't watched that, check that out. Not gonna go over this too much here, but had a nice flush today. Actually, let me just jump to here. Had a nice flush today, went under the 20-day moving average, rallied, closed back above it. Looking for that shakeout. We're under the main part of the volume shelf, so nothing has changed with my entry point from that breakout watch list. Looking for a move over 25.86, the high from September 2nd, as an entry point on that. Let's see. Next we have LTHM. I don't think this made the final cut. I know it was on my watch list. B plus group strength, 50 out of 197. Within that group, it's in the top third, 13 out of 47. Composite rating 83, but relative strength 95. So fails that double 90 test. Accumulation distribution B. Earnings per share this last report up 500% from -1 cent to 4 cents. So that negative flop. Sales have been accelerating, went from -26 to +5, +34, +57. After-tax profit margin up 7.6%. Fund ownership also increasing, but at a decreasing rate. Went from 392 to 491. Let's check out the chart. This one has been all over the place. So you can see ATR is still elevated. Oh, down. This is showing after hours down another 2%. It's pretty liquid stock, so that might be true. Nah. What I would be looking for is a break over Tuesday's high, 26.30 as a possible buy point. If this can like kind of bounce around lower, then we could use the volume shelf and where the same area where a couple of these upper wicks failed as a possible buy point. So like 25.83 range. As long as you can manage your risk, which I mean, that's 4%, that's 5%. I don't want to keep many stops over 5%, especially when the market is showing some signs of weakness right now. So LTHM, maybe something you pass on for now, but I'm going to be keeping some alerts on it. GLBE, yeah, I saw that fall through today. We'll cover that in a little bit, but MIME, this is one that had really nice earnings pop. Let me just roll through this. Earnings per share rating 96, group strength A+, 11 out of 197, 3 out of 37 in that group. Accumulation distribution A-, composite rating 97, relative strength 91. We do have those double 90s. Let's see. Earnings per share is increasing, but at a decreasing rate. We went 146, 136, 87, 45. Yellow-ish flag on that. I mean, 45% earnings per share increase. That's still a really good year over year, but we're decelerating how quickly we're improving there. Sales is basically even around 20, and then this last quarter up 24%. After-tax profit margin increasing around 15% every quarter, or year over year, but for each of the quarters. Fund ownership increasing 362 to 419. It's good to see. MIME. So we had that jump up 23%. We've pulled back to the 8-day exponential moving average. Did close under it. As this is flagging out, allowing that 20-day moving average to catch up, that would be great. So this is one, if we could, I mean, maybe this week, probably next week is going to be better, but I want to put it on the radar. If we can undercut the low in this pullback, similar to DLO, that's an area where if we undercut the low and then recapture that price, then we have a lower priced entry point, and then we can manage risk even more tight. And then if it doesn't work out, if it doesn't come back, you risk whatever the low of the day was when it did undercut there. So that's how I'll be playing this if I do take it this week. Otherwise, if we can get going and then move over kind of this range, 70, 60, main part of the volume shelf, a couple failed daily highs, that would be another area that I would look for. MIME. MNDY, similar story, relative strength 98, composite rating 81. Dang it. Accumulation distribution A+, group strength A, 18 out of 197. This is in computer software. Of 106 stocks in that group, it's 32nd ranked compositely. I don't know if compositely is a word. Composite, I meant. Let's see. Fund ownership. We only have 1 quarter, 137 there. MNDY. Monday.com. Thinner traded name, so adjust size accordingly. Ooh, this might be a... Yeah, so this is an IPO high tight flag right now. Combining two things that I really like trading, especially recently, like all the strong stocks, DOCS, DLO, ZIM, those have all been IPOs that have been extremely strong. So if I could see an IPO holding that great relative strength, holding that 8-day exponential moving average, not showing really any weakness, up 2.2% on a day where the market was really rough, this is definitely something I want to be looking for. Break over today's high, and look at that, 400. That's going to be my entry point on this. It's over the main part of the volume shelf, kind of free skies above. If we could have undercut the low, like this low on one of the pullbacks, either yesterday or today, that would have made it like an A+ setup. But for now, holding great relative strength, IPO, high tight flag. Thinner traded though, so adjust size accordingly. I meant to do this with Dvax, but Moderna, mRNA, current position that I have, group strength B+, accumulation distribution A, composite rating 89, relative strength rating 99, very strong there. In that group, it's 9 out of 744, and fund ownership, I mean, obviously, since 2020, March, I wonder why it's been so hot, 365 to 1,500. Sales, 826, over 1,000%, over 1,000%, over 1,000% increase, incredible. Earnings per share, plus 911% with that negative flip. And then this quarter up over 1,000% as well. Moderna held up pretty well today. I got in at a lower price when we broke over the 20-day moving average on Friday. Sold some into strength yesterday, kind of managing my risk on that. Down 3%, but still in kind of the upper half of yesterday's full candle. Did so on lower volume, still above the main part of the volume shelf, above the 8-day exponential. And this is such a powerful setup that I really want to give this room to run. I don't want to take this trade off too early. Even when the market's showing a couple signs of weakness, this is one of the few stocks that I want to continue to hold. This went up 225%, pullback of 30%, so it fails that high tight flag, so now it turns into what's called a rocket base, according to Leif Sereda, 2019 US Investing Championship winner. Yeah, doing a lot of good things. If we can trade down to that 8-day, to that main part of the volume shelf, like right through this range, what was that? Like 410 area, I might consider adding if we can get a tight spot and then some buyers to step in. I have a relatively large position for me and my risk tolerance on it right now. So unless we get a pullback to that area, some tightening, and then a breakout, I'll add to it. Otherwise, just a break over yesterday's high, 438.55, might be a little bit aggressive with how the market's been trading. In perfect times, that's probably a better trade. So, I mean, you have to decide what you're going to do with your trading. This is just a stock that's holding great relative strength with great earnings numbers. Moderna, mRNA. Got 5 more for you, and then we'll get to the stocks that you guys want to see. You have ALGN, ESEA, Tesla, and GLBE. If there's and BXC, I see that there, along with LSPD. If you guys have any more, drop them in the comments and we'll get to them. We're getting there shortly. Next we have PANW. This is similar to MIME and MNDY. Popped on earnings, now starting to tighten up. I want to be in the strongest names as possible, not trying to deal with something low in the base, especially when the market's showing weakness like this. So group strength, A+, accumulation distribution, A, composite rating 94, Relative strength, 93, so we have double 90s. We have an A+ group strength, 11 out of 197. Within that group, it's the 6th strongest stock out of 37. Fund ownership also increasing, 1283 to 1443. Earnings, not anything like incredible, up 8%, sales up 30%, after-tax margin up 13.3%. So there must have been more in that earnings report. I'd have to do more research to figure out exactly why. If you guys know, drop that in the comments so I at least know where to start my search. PANW, nice pop on volume, about 30% or so. We're trading sideways. Look at how light the volume is getting compared to that pop. 8-day exponential moving average is starting to catch up. Give that a day or so to do that. Or if we can get a day where we undercut the lows here, then it's break over the next day's high is the possible buy point. But until we get that, we're going to be looking for a break into all-time highs, 470.05 as a possible buy point for PANW. Site is next. Thinner traded name, 240,000 shares traded. Earnings per share rating, 96, excuse me. Group strength, B+, 45 out of 197. It's the 3rd strongest stock out of 21, so 14.5% there, 1/7. Accumulation distribution, C, yellow flag about that. Composite rating, 96. Relative strength rating, 89, so just under that double 90 that we look for. Fund ownership increasing from 550. We did have this pullback, 520 in December. Now we're back up to 580, so good to see that bouncing back. Earnings per share, we have 4 quarters of positive growth, 33%, 317, 138, and then 48. So kind of all over the place there. Sales, 15, 26, 41, 33. After-tax margin, positive 11. Steady otherwise. Let's go site. Remember, this is a slightly thinner traded name, 240,000 shares traded a day. Today was 130,000. We have this nice cup pulled back to the 20-day moving average, bounced there, a nice undercut of some previous lows, tightened up, another undercut of the lows. So as many times as we can undercut the base that I'm not already in the stock, it is better for the setup because it shakes out all the traders that are trading with very tight risk management. And then when the stock does move back over a buy point, then they're rushing back in. So it kind of increases the buying supply after a good shakeout like this. So with this, we had that false breakout, shakeout. If we can get an inside day tomorrow and then break over Tuesday's high, 203.09, that would be an entry point. But I would probably, for now, just be looking for break over 204.68, the high from Tuesday, unless we get that inside day. Stop under the previous day's low is only 3% risk there. So thinner traded name, you're risking the liquidity on it, but tight possible stop there. UHAL is next. B- group strength, 95 out of 197. 4 out of 19, so top 20% there. Accumulation distribution, B-, composite rating 95, relative strength rating 88. Incredible earnings per share growth, 70, 491, 411, 294. Sales 15, 26, 29, 49, so we have that acceleration of sales. After-tax profit margin 20, 15, 7, 23, all positive there. Let's see, fund ownership also increasing, 65, had a pullback in September to 631, but then got back on track to 812. Let's see, UHAL. Is that right? Oh, I should not have put this on the list. Average daily volume, 44,000. I thought it was 440,000. Excuse me. I'm not going to take any trades that are under 100,000 average volume there. So my bad. I read that wrong. Let's not dwell on it. All right. BRTS. Same thing. Okay. Next, we got WDAY. There we go. Meets the average volume requirement. Earnings per share, 94 rating. Group strength A, it's 18 out of 197. Within that group, it's the 7th strongest out of 106 stocks. Accumulation distribution B. Relative strength 79 against the composite rating 97. So relative strength wise, not as strong. Earnings per share 62.46, 98.46. So, I mean, above 40% earnings per share growth the last 4 quarters. That's really strong. Sales, mid-teens, upper teen range of increase there. Still positive. After-tax profit margin, doing its thing. Upper teens, lower 20s. Fund ownership, let's see. Also increasing, 1431 to 1832. Doing good things there. WDAY. All right. Good volume on that pop. Let's zoom out. So you kind of have the cup. We're putting in a handle, allowing that 8-day exponential moving average to catch up. Lower volume last 2 pullback days, which is good to see. Unless we get that undercut of the lows like we saw in DLO, and what we're looking for in, I just said it, site. We're going to be waiting for that 8-day exponential moving average to catch up, unless we take out the high 278.23 WDAY. Here's one that I forgot to add, LAW. Not too much on this name. It's very early. Group strength, it's 18 out of 197. Within that group, it's 31 out of 106, but relative strength, 97, composite rating, 82. This does artificial intelligence for like legal technology. So pretty interesting stock, and something that I had on just my own watch list as a consolidated here, but it had earnings, so I wasn't trading into that. Had a nice undercut of that move, moved higher. Another strong pullback, but on lighter volume, bounced right at the 8-day, rallied back up here. So not one that I'm going to be trading like this week, but if we can drill down to a lower time frame, here we had the shakeout, nice tight range. That could have been an entry point. I just wasn't paying attention to this one, especially right at that volume shelf too. Dang it. But something that if we can get another like pullback to this area, tighten up like we did earlier today, and then buying the move out of that range. So, got to get creative a little bit on this name, but really strong name on an IPO, up 70-ish% from the IPO day. That was Law. And last but not least, WIRE. Let's change the screen so you guys can see that. Nice kind of like a V in handle. I wouldn't call that a U. Earnings per share rating, 98. Group strength B+, 61 out of 197. Strongest stock out of 33 stocks in that group. Accumulation distribution B+, composite rating, 99. Unfortunately, relative strength only an 86 there. Earnings per share this last quarter up 1,000% year over year. Sales up 194%. After-tax margin increasing 25%. Very, very strong with all that. Fund ownership had a little bit of a dip in September, got back on track, and is now pushing higher to 431 from 388. Let's go Wire. Also a thinner traded name. Let me make sure. Yeah, 136, so barely scrapes by there. But had that nice move up, pulled back, tightened up, and let's see, did we undercut the low here? Let's see, low 84.01, 84.09. I want to see another undercut of this low just to shake out the last people, and then these 2 daily highs right here, both above the 20-day moving average and kind of in the middle part of this volume shelf. You could wait until this range, 87.49 as a possible buy point. That gets you over the main part of the volume shelf there. Thinner traded name, but good volume coming out here. ATR rapidly declining here, so that measures the volatility of the daily bars. Getting nice and tight. You can keep a tight stop loss on any trade you put there. WIRE. Let's see. All right, so the 3 stocks that you guys want to see. Well, nope, got some more in the chat. But first, ALGN, stock that I currently own. Not a huge position. Took some off into this 3-day pop here, but earnings per share rating, 97. Group strength A, 21 out of 197. Within that group of 136 stocks, it is the #1 composite rated stock. Composite 99, relative strength 93, matches that double 90 that we look for. Earnings per share was up 970% year over year, the last report. Sales up 187%, after-tax margin 24%. Incredibly strong fundamental stock. Fund ownership has been exploding, 16-14 to 21-25, with no setbacks there. Let's find an entry or an addition point, because this is a stock that showed great relative strength today. We had a nice shakeout. Thankfully, it did not hit my stop. I got in on this candle when we popped right there above the 20-day moving average. Good shakeout yesterday. Really strong move today. If we can get a couple like daily bars, so maybe not like this week. I drew that terribly. But next week going in, if this range tightens up, then just a break into all-time highs, 733.33 could be a possible add spot for ALGN. All right. You also wanted to see ESEA. Don't think I've heard of this stock before. Average volume under 100,000 shares, so be a little bit cautious on that. Probably not something that I would trade just because of that liquidity threshold. Excuse me. Group strength A+, 14 out of 197, 9 out of 27 in that group, so top third. Composite rating 94, relative strength 99. Nice cup and handle here. Took out, oh man, let's just jump over to the chart. ESEA. Wait, what do these guys do? Transportation and shipping. Okay, so right alongside with ZIM. I own ZIM. That's been a monster. Nice cup handle, breaking out of this 2-day pivot on an uptick in volume, and it's up after hours. This would have been an awesome move if you trade these really thinly traded names. But shipping has been a theme all of this year, excuse me. And we had this mini dip, same with ZIM. Mini dip, it was like a 30% pullback or whatever. Tightened up and then got going 32% above that consolidation area. So ESEA, I mean, that group is very strong. I mean, look at the accumulation volume on ZIM. This is something that I'm looking to add on any pullbacks. All right, let's go Tesla. Working up that right side of the base now. Was on a breakout watch list previously. Let's see, group strength C, but I think it's in the, I don't know. You can argue it. Auto manufacturers, is that the right group for Tesla? It's the strongest composite rated stock in that group. Accumulation distribution A-, composite rating 95. Earnings 105, 95, 304, 230, so almost 4 quarters of 100% plus. Sales 39, 46, 74, 98. Acceleration of sales. After-tax profit margins increasing by 10 or so percent the last 4 quarters. Fund ownership continues to increase, 1649, steady increasing to 2794. Tesla, no, TSLA. All right, so yeah, climbing up that right side of the base. We had a couple, I tried taking it on this green candle, unfortunately moved higher and then just flushed that right back to the 20 and the 50. Since then, it's moved 15%, and I mean just a little extended right now, but not doing anything wrong. Lower volume on today, and still, I mean, ended flat on the day, above the 8-day exponential moving average. That's rising, 20 days rising, and you finally have that 50-day over the 200 days. So now you have the right order of each of the moving averages, which is great. I would probably need to see kind of either check back or just sideways action to try to get into this name. But right now, I'm not trying to buy stocks that are lower on the right side of the base. I want stocks that are breaking into new highs, because there's still some people that are stuck at these higher prices that if it does get up to this range, you're going to see some selling pressure, and that's only 11% higher. So that was Tesla. Let's go. All right, let's jump to the comments. Tesla, LSPD, there we go. Yeah, Lightspeed Commerce, 19 out of 197, so group strength, that's an A. 11 out of 46, so top 25% there. Accumulation distribution A, composite rating 82. That seems a little low, but relative strength 98. I mean, relative strength pays the bills. Let's see fund ownership on this guy. Yeah, nice increasing, 180 to 525. Earnings per share still negative, so doesn't have much to compare to. Sales 62, 78, 127, 220. Acceleration of sales. After-tax profit margin, still trying to figure that out, minus 40% the last 4 quarters. So LSPD, one that is definitely extended a bit on the short term, but is this a name that can show good relative strength as it pulls back? So 117% up. Can this consolidate? Let's see, what would 25% look like? That seems a little bit aggressive for a 25%. Definitely don't want it to pull back 25%. If we could pull back to the 20-day moving average, got a little bit of a volume shelf there, that could be an entry point in a couple weeks. Or if this just tightens up here and then goes again, then a break into new highs could be an add spot. But I'm not buying right at this point. But 34% move from the previous, you had like a 4-day pivot here, post earnings. Nice to see. Good strong stock. BXC. Yeah, this was on the watch list this week. I actually traded this stock on Tuesday. So we had these 2 tight days. Broke out over that. So what was it? 58.79. That was my entry right around there. I got a good entry on it. Got out 2% on it, thinking, okay, here we go. Because if you zoom out, you have that kind of what am I trying to say? Pullback, undercut the lows, shot out with good volume, pulled back, got out again with good volume. Then we pulled back, tightened up. Unfortunately, I think this has to do with crypto. Let me check really quick. BXC. No. Not anything to do with crypto. Not sure what I was thinking there, but 96 relative strength, composite rating 97. I mean, these are all things that I covered on the breakout watch list. Fund ownership is now back to increasing. Second strongest stock out of 21. 2 quarters of earnings per share over 1,000%. All 4 quarters are above 250%. So fundamentally very, very strong. Just a trade that didn't work out. And that's how you manage risk. I got stopped down 4% or so on the trade. Yeah. And now it's flushed even lower, down 8%. So keep those stops as tight as possible. Manage your risk well. If a trade's not working out, it doesn't work out. They're not all going to work out. As swing traders, we're just trying to cut our losses as quickly as possible and then let the winning ones run. Higher selling volume these last couple of days as well. Something that I'm going to avoid until this starts to turn up and get above this 58.25 volume shelf here. So BXC, one that I tried to take and got stopped out for a loss. It happens. All right, let's see. Globe. And this is the last one that I see in the chat. So unless you guys have any more stocks, this is going to be the last one. Last call. So Globe, super strong IPO, kind of double bottom here, took off again, had this wacky earnings day, pulled back, and I did get some shares in my just like long-term account, growth account, on an undercut in break right through here. Got 23% out of it, did not take the trade off because I'm trying to hold that stocks in that account a little bit longer, the new thing that I'm trying in that growth account. And unfortunately, that just flushed down 7.5%, basically at my entry point today, main part of the volume shelf. This is going to be kind of important to see if this holds. We have the volume shelf, we have the 50-day moving average, but we are coming down with an increase in volume. So a little scary there. If we can undercut some of the lows and then maybe not that low, but like undercut this range, the 2 daily lows before earnings, and then undercut the 50-day and then move back higher, that might be an add spot at a lower range, but that's going to be a little bit aggressive. So we'll see how the volume shelf, the 50-day moving average, holds its support. But this is a lot of volume coming out on the stock, which is definitely concerning. All right, we got a couple more going. Nike. Not the fastest moving name, but man, yeah, that popped on earnings, 21%. Post earnings drift up 37%. Whoa, up 37% from the pre-earnings day, 38%, whatever. Now we're starting to get that just kind of normal pullback under the 50-day moving average. Some high selling volume in this pullback as it undercut the 50. That's concerning to me, and just how the selling has been pretty relentless. We haven't had much of a bounce since then. I don't buy stocks under their 50-day moving average, so unless this curls up, gets above the 50, not something that I want to kind of trade. This is showing after hours. That's why it's green like this. Minus 1.19. Let's see, 160 on the day. So yeah, I'm not sure what the after hours news is on this, so we'll see. Nike, what were the last ones? Crocs. Yeah, Crocs has been a monster. Let me jump to, not that. Let's get some info on Crocs. Earnings per share rating 99, group strength 30 out of 197. That's an A. It's the strongest of 8 stocks in that group. Apparel, shoes, and retail. Composite rating 99, relative strength rating 98. Good combination there. Timeliness rating A. Need to do more research to see what the timeliness rating is on this. Fund ownership also increasing, 439 to 653. Earnings per share, the last 4 quarters, 65, 783. Jeez. December, yeah, crushed it, man. And then 577, 121. Sales, 16, 56, 64, 93. Acceleration of sales for Crocs. I don't have a pair, but maybe I should get one. Let's jump back to the chart. Yeah, so ATR is definitely expanding as this kind of megaphone's out here. You can see, yeah, ATR is expanding. When you have that happening, it's not the best time to put on a swing trade, because if you're using a tight stop, you're more likely to get stopped out with the current volatility. You want those really tight areas that say okay, if it moves over this area, it's probably going to be breaking out, and I can put a tight stop loss. And typically, if I get stopped, it's because the stock's flushing. Where here, the stock could just be moving randomly, and you could be stopped out at a 5%, 6% loss. And that's too much for my risk tolerance. We'll see good relative strength up after hours. There must be some retail news after hours with Nike up, this up. I don't know. We'll see. So yeah, we'll see how this trades. I don't see a clear entry point right now, but if you're holding the stock, it's above the 50-day moving average. Twice it tested that before, so that's kind of your key. If it closes under that, especially with an uptick in volume, that's probably the time to exit. So that's Crocs EF. Let's see, this one is EFTR. This one's super wonky. Yeah, pulling back, lower volume. I'm not sure exactly what this stock is. EFTR. Different cancer treatment. Yeah. This doesn't fit what I typically trade, so I don't want to weigh in on this without any good information to say. So that's going to be the Watchlist, sorry, the midweek movers. If you guys enjoyed it, please leave a like. Always trying to get that 10% viewer to like ratio that you guys do so well. I really can't thank you guys enough, because that's what sends the video out to other traders on YouTube or anyone interested in finance. So those likes, comments, that does me well. So I appreciate all the support there. Subscribe to the channel. I think we're 10 away from 5,700. That would be awesome to hit today. Trying to hit 20,000 by the end of the year. Really trying to ramp up this channel by the end of the year. Make sure you get your 2 free stocks with Webull. If you don't have a trading platform, I use Webull for that growth kind of long-term hold that I was saying with Globe, GLBE. Always good to have multiple brokerages just in case one goes down. We've seen it with Robinhood. I've seen it with TD Ameritrade, which that's what I currently trade with. And they give out free stocks. One stock, $3 to $300 when you just sign up. Another stock, $8 to $2,000 when you deposit $5. Link for that is in the description below. Otherwise, I'm going to be trying to crank out a Money Talks interview with my friend Dan Robles, where we talked about how he got out of $18,000 of student debt in just 6 months. That should be coming out this weekend. So see you guys on Sunday.